Hello, good day, everyone. Hi, welcome back to our live webinar for today. So I guess everyone can hear me clearly, right? So anyway, in conjunction with our Ultima Makrets trader leads for season 2, so we are actually having our webinar for today. So we hope that through the webinar for today, we're gonna help you to achieve better in our upcoming competitions. Okay, for you guys to be more competitive in the competitions. All right. So basically for today, we're gonna cover about the technical indicator in MT5. So what we are going to cover today is may consider a little bit basic guides. So if you are a beginner trader, so I hope it will help you. But if you are a experienced traders, so please bear with us because I believe there is some audience here is a beginner. So at the same time, I hope that what we can have here today is covering the technical indicators and able to help you guys to look at it at a different angle. So if you are a experienced traders, also I hope it also can help you to have some different insight about the technical indicator as well. All right. So next, what we're having today here is we're gonna cover some parts over the technical indicators. So the first thing is that we're gonna discuss why we're gonna use the technical indicators. Okay. All right. And then the second part is we'll cover it quick for some beginners. So it will be covering on the guide on how to set up the technical indicators on MT5. And then for the third one, we will be discussing about the top 3 indicators that we can use for our tradings. So of course, these are not it's not actually the top 3s, but it's the top 3s based on my experience. So I'm just sharing it as the indicator that I would use. So this is the indicator that I choose. As a top 3. So I would like to share with you guys. Okay, and then for the fourth one will be the common pitfall to avoid when we using the technical indicators. All right. So what are the things that you need to be cautious on when you're using technical indicators? Okay, and then what are the things that you need to avoid? Okay, so this is what we're going to cover on for today. All right. So first thing, so why do we use the MT5 technical indicators? All right. So if you ask me, is technical indicators really a powerful tool? So over here, I would say it's not 100% yes. But if you are a beginner, you want to learn about technical analysis. So learning the technical indicators can be a good start. Okay. And then for some experienced traders, the technical indicators can be a very helpful tools to assist you in making a trading decisions, or when it comes to analyze the market, it can be a very helpful tool to assist you. So basically, I'm not going to say the technical indicator is a very powerful tools, but it can be a very helpful tools in helping us. So why are they? So why are they very helpful? So first, they're actually able to help us with a better trading decisions. So basically, through the use of indicators, it can help us to identify the trends and then identify the trends momentum. And then from there on, it's able to help us to identify the potential entry and exit points. Okay, so this is what indicator can help us to do. Okay, so we're going to cover it later. And then the second thing is it is basically able to visualize the signal in a visualization form. Means that for some parts, for some analysis, it can be very, random. Okay, it can be very like visual. It can't be visualized easily. But through the help of indicators, basically we could visualize everything. Okay, we could be able to quickly analyze the chart without going through every single candlestick or even like spending too much time on the charts. So basically, through indicator, it's able to help us visualize the signal or the charts that we are looking at. Okay, so and then of course the third thing, the last one is very easy to learn. Okay, so basically in technical analysis, you cover a lot of stuff. Like for example, we got chart patterns, we got candlestick patterns, and then we got like, for example, Elliott wave, Fibonacci, all these kind of things. We got many things here over there, okay, including technical indicators. So among these, actually, technical indicators is the one that are considered easier to learn. Okay, so many indicators, they are actually beginner friendly. It means that you're very easy to learn. You just basically need to learn how to plug into to your charts, and then you need to know the working logic behind the indicators. So it basically can apply to any strategies. Okay? I mean, if you're an experienced trader, you got your own strategies. You can also apply technical indicators to assist with your trading decisions. So this is what we can have. So this is basically the advantages or the plus side of the technical indicator. So back to the end, I wouldn't say it's 100% a very useful tool, okay? But in some terms, it can be very helpful in helping with our trading decisions and able to visualize the signal, and it's very easy to learn. Okay, so this is what I mean, technical indicator can be helpful for us. All right. Okay, so let's go through the charts easily. Like for example, this is the gold charts. Okay, gold, XAUUSD. So from here on, maybe like on the recent trends. Okay, we look at over this part. Let me put on the ball pens or pointer. Let me one moment. Okay, all right. Okay, over here. All right. So if let's say we are looking at the charts over here, right? So you might like identify the charts, or the trends as an uptrend, right? So, but without using the indicators, okay, it can be very confusing. Okay, like for example, over here, you see that it's considered on the uptrend channels. So you can identify this as an uptrend. But in fact, if you look at the entire chart, okay, you look at the whole chart for longer periods, you would see that it's actually under a consolidation trends, or rangings. Okay, the trends on rangings. Okay, so if we are having the help with indicators like, for example, we put on the moving average, and we put on multiple moving average, this could help us to identify that the trend is actually on a ranging trends. Okay, why will you say that? Because if you look at the moving average, okay, you look at the multiple moving average over here, the blue one, the red one, and the green ones. Okay, so they are actually moving in a horizontal directions. So when multiple moving average are moving in horizontal ways, okay, they are actually considered a sideways trends or a ranging trends. Okay, so this is how we can use the indicators to to help us quickly identify the trends in the market right now. So this is one of the useful part of the indicators. All right. So so far, I think anyone have any questions? If no, then all right. We are going to the second part. So the second part will be adding the indicators to MT5. So I believe for some, for many of us here already know how to plug in, but I know there's still some beginners in our audience. So we're gonna quickly go through how we can actually add in the indicators in MT5. All right. So the first thing, choosing the indicators. So all right, let me put on the charts over here. All right, so putting on, if you're not gonna add any indicators on the charts, can be very easy. So basically what you can do is you can put on these, let me see, okay. All right, you can put on these navigators, all right? And then you can come on here to look for all the indicators, okay? Like for example, in these cases, we can select, like let's say we're gonna put on MACD, okay, on MACD, all right? So what you can do is select the MACD, okay? Oh, sorry, let me wait one moment, okay. Okay, all right, so you just drag on the MACD to the chart, okay. All right, you will see there's a parameter setting windows coming up, all right. So the second part, you will just need to set your parameter based on your trading needs. Like for example, the MACD, I will set 535.5, okay. So just click on enter. All right, so I think the MACD indicator is done. All right, so it's quite easy. So of course, if for the choice, you can come over here, insert. Okay, if you want another way to do it, you can come over, insert, and then select indicators. So there are a few type of indicators over here, like trends indicators, oscillator indicators, and then volume indicators, and so on. Right? You can just basically choose from here and then click on it. Like for example, trend. Okay, let's say I want to set moving average. Okay, right. So the window will just pop up, and then just key in the parameter that you need. All right. So basically, setting the parameter is very easy to set up any indicators that you want. Okay. All right. So let's go to the next one. All right. So what are the top three indicators that we can consider to use? All right. So over here, I want to make some disclaimer because there's actually a lot of indicators out there. So we can't cover too many of it. We can't cover too many of it in a very short sessions. So I will just cover on the top three that I think is very powerful. Okay, this is based on my personal view and based on my personal experience. So these are the most, not the same most. Okay, I mean, this is the top three indicator I like the most. Okay, or I would say I use the most. Okay, because I think they are very helpful and they are very useful for me. Okay, so this for sharing over here. So these are the top three indicators that I would choose to share with you guys today. So I hope it will also be helpful for guys to use it in your tradings or when you're going to participate in the competitions. So I hope that it can be a very helpful info or knowledge for you. Okay. All right. So the first one, the top ones. Okay, I will choose it for the top ones. Okay, just for fun. Okay, so the moving average is basically considered a most powerful indicators in the market for me. Okay, okay, among all these, okay, the moving average is considered the most powerful. So basically, the moving average, they are considered as a trend following indicators, meaning that by using the moving average indicators, you are actually able to identify the market trends, or you can like justify the market trends based on the moving average. Okay, so basically this is the things that how we can identify the trends through the moving average. Okay, so it is the first thing is used as. Okay, so it is used for sorry. Okay, it is used to identify the market trends. So how we can do it? So basically, when the price is crossed above the moving average, okay, it's crossed above the moving average, or the price is above the moving average, it actually indicates that the trend is on uptrends. Okay, so when the price is on the moving average, above the moving average, it is on an upward trend. Okay, so when it crosses below, meaning that the price is below the moving average, okay, below the MA, it's in a downward trend, meaning it's on a downtrend. Okay, so it's simple as that. So this is how we can use the moving average to identify the trends. Okay, so how we can interpret the signal more further or more, in a better way. So what we can do is we can apply multiple moving average on the different setting, different parameters to identify the trends. Okay, so when, like for example, in this case, okay, we're gonna use two moving average. Let's say over here, let's use two moving average. Let me delete some of the indicators. Let's say we just apply two moving average. Okay, all right. So this is the 20. I'm using exponential EMA. Okay, so because the EMA is more reflective on the recent trends, the recent momentum, so I'll actually opt for the EMA. Okay, all right. So you can still use MA if you want, but based on my experience, I would prefer more on EMA because they're actually putting more weighting on the recent momentums. Okay, so it can be more accurate in reflecting the recent trends. Okay, right. So I'll be using 20 and 50 EMA. So basically, when we can justify a trend is when if the shorter period of moving average is crossed above the longer terms moving average, it is actually considered an uptrend. Okay, but if let's say we see that the trend, the moving average is crossing up and down, so this is basically considered as a consolidation trend, meaning a ranging trend sideways. All right. So how we can consider is it as an uptrend. So when the moving average is crossed above, like for example, in this case, you can see that the crossing is very significant. Okay, we can put it on our charts as well. Okay, like for example, over here, you see that the crossing above, the crossing, okay, the shorter time frame crossing is above the longer time frame. Longer periods. Okay, so basically it reflects that the trend is on and uptrend. Okay, like over here, it's still above 20 is above the 50 periods, so it's uptrends, uptrends. Okay, over here we see a short cross, so maybe a short downtrend over here, but they quickly cross above. Okay, so you consider this as an uptrend. So like over here, we can see the 20 EMA is crossed below the 50. Okay, it's crossed below 50. So basically over here, we could justify that the trend is reversed into a downtrend. Okay, and over here, you see there's a crossover. Okay, so this is uptrend. Okay, so basically what we can do is we're using multiple EMA crossover to identify a trading signal. Okay, so when is the right time we can go on for a trade? So basically when the MA cross, okay, the MA cross, okay, and if you see the price is after the crossing, the price is pulling back. Okay, so this is basically considered a uptrend dipping. Okay, like for example over here. Oh, let me see where's the trend that we have just now. Oh, sorry, it's over here. Okay, over here, right? For example, this case. Okay, so the price cross above the MA, the 20 MA cross above the crossover, okay, what we call as a bullish crossover. So when the price pull back to near the MA, near the MA, for example, in this case, 20 MA, so this is actually considered a dip on an uptrend, okay, a dip on an uptrend. So this basically provides us the entry opportunities over here. Okay, so this is how we can use moving average to do it. Okay, so if let's say you're going to offer more EMA, you can also do it over here. Okay, over here. This we got a couple more EMA over here. Okay, so basically this over here we cover also on the 200 EMA. So when you are going to use the MA, the crossover MA, try to use two different MA that have longer periods. Like for example, over this case, you can use the 50 MA cross over the 200 MA. So this is what we can use. Okay, so basically the 20 MA, 200 EMA is to justify the longer terms. Okay, and then the 50 is to justify the shorter terms. Okay, so basically based on comparison between the short and long terms trends, we can like more easy to interpret the trends. Okay, to interpret the trends and use it as a signal for the entry. Okay. All right. So how can we set the parameters? So basically, this is what we can say, just that what I covered just now. Okay, if you are short-term traders, you can use like just 20 or 50 MA. So you are longer-term traders, you can go for like a 50 and also a 200 MA settings. Okay, like in this case, we're actually using the 250 MA, okay, to identify the entry points. Like in this case, okay, let me see over here. Okay, over here, like the crossover is over here. So basically we can use it to entry over here when the price, the EMA cross, right? Okay, so this is how we can use the moving average, the MA, okay, to help us identify the trends. Okay. All right, so the second thing, we can also use the moving average convergence and divergence, which is what we commonly known as the MACD. Okay, so basically MACD is a joint of the moving average and also some of the calculations. So it is very complicated to explain, but basically it's actually based on the moving average. Is a extending versions of the moving average indicators. Okay, so what the MACD used for is basically to identify a trend and also to justify the trend momentums. Okay, so this is how you can use. Okay, so basically the MACD is there's actually a different type of MACD over here. So for the MACD on the MT5, the default indicators on the MT5, you would only have one line, which is the DIF line. Okay, DIF, which is a DIF line. Okay, but to actually put the MACD on a more useful terms, or I mean to make it more useful, we usually would consider using the two-line EMA. Okay, so the two-line EMA would actually includes the DIF line and also the DA line. Okay, so for this case, you can actually go on to the MetaTrader 5 official website. Okay, you can go on there and search for the indicators. I mean, there's actually how to say is a external indicators that you can use to plug into your MT5 as well. So in this case, I'm actually using the two-line MACD. All right. So one of the methods we can use on the two-line MACD crossover is that we can use a two-line MACD crossover method. Okay, which is we having the DIF line cross over the DA line. Okay, so like in this case, when the DIF line, okay, like for this DIF line, okay, over here is the blue line. Okay, this is a DIF, and the red line is the DA line. Okay, so when the DIF line cross over the DA line, for example, in this case over here, it actually would signal a buy signal over here. It will signal a buy signal. It's considered as a buy signal. Okay, so when the moving average cross below, I'm sorry, the DIF line, okay, cross below the DA line. For example, this case, the blue line is crossing below, okay, crossing below the DA line, the red line. Okay, so this is considered as a sell signal, meaning it's time to sell it. Okay, so this is the one of the method we can use on the MACD. Okay, and then the second method is we can use the divergence. Okay, meaning that when the price reach a new high, but the MACD line or the MACD histogram, okay, this part, okay, did not follow suit, meaning that it does not create any new high. Okay, the price is on a new high, but the MACD histogram or the MACD line, the DF line, is not creating a high. Okay, meaning that it could signal a bearish diversion. Okay, meaning that the market is possible going to a bearish reversal. Okay, and then conversely, okay, when the price hit a new low, and the histogram fail to do so, or the DIF line also fail to do so, okay, this could suggest a bullish reversal over here. Okay, so this is how you can use it. Okay, so you can choose the parameter that you want. So like for example, over this case, let's go through the chart again. All right, so basically this is one of my trading strategy that I will share to you guys. Okay, like for example over here, by using the moving average, we basically able to justify that the price is on an uptrend. Okay, on an uptrend, right? You see that's the bullish crossover in the moving average. Okay, so when are we gonna enter the markets? Okay, what we can do is we could use the help of the MACD. Okay, the MACD. Like for example, over here, when the price pull back, it pull back to the trend 200 EMA. The 200 EMA, all right. And then of course, if you're gonna enter right over here, okay, sometimes you got lucky, the price will rebound, okay. But sometimes if you got unlucky, like for example over here, okay, the price breaks further, right? So what you can do is we can use the MACD crossover. First thing, we can use MACD crossover as a signal, like for example over here. Okay, price came into 200 EMA, and then we see there's a crossover over here. Okay, bullish crossover. Okay, but if you want a powerful method, I mean, if you want a more accurate signal, you need to wait for the MACD to have a crossover above the zero line. It means you need to have a crossover above the zero line to confirm the entry signal. So in this case, we got the 200 EMA over here supported, okay, and then the MACD having a bullish crossover above the zero line. Okay, so this is where we can enter for a long. Okay, like in this case over here, you see, oh, there's 200 support over here. Okay, however, the MACD does not cross over above the 20 line. Sorry, the zero line. It does not cross over above the zero line. Okay, so basically you see there's a short term of crossover, it's below zero line. So basically we would not consider this as a good signal. Okay, this is not a good signal. So this is what we not this is when we're not going to enter for a long trades. And conversely over here, you can see, okay, the price now break down, okay, break down below the 200 EMA, okay, and then we got the EMA form into a bearish crossover. Okay, so this is the first signal over here. All right, and then over here we can see that now we know the trend is on the downtrend. It's on the downtrend over here, okay, and over the MACD. Okay, the MACD, we are having a bearish crossover over here. Okay, this part you can see is a bearish crossover over here, and it's below the zero line. Okay, so this can be considered as a very strong downtrend. Okay, and when the price, when the MACD crossover, this provides us a signal to enter a short trade. Okay, so this is where we can use the MACD to identify the entry signals. Okay, and in this case, okay, in this example, we're actually using two indicators to help us to identify the entry, the trading opportunities over here. So this can be a very actually is considered as very powerful tools to help us to identify the entry, to identify the trends. Okay, so let's summarize. Basically, what we use over here is we're using the moving average indicators to identify the trend. Okay, and then we use the MACD to follow the trends, to identify the trend momentums. Okay, so this is what we can do. Okay, so let's see. So basically, MA is a trend following indicators. Okay, and then the MACD is a trend following and a momentums indicators. So we use the MA to identify the trends, and then we use the MACD to justify the trend momentums so that we can find the best entry for us over here. All right, so this is how we can use. All right, these are the two indicators that we are covering on here. All right, so any questions over here? Yes. All right, so just leave me the message on the chat, so I'll reply to it if there's any. All right, so if not, let's go to the next part. Okay, like the third indicators I would consider as a useful one. Okay, would be the RSI indicators. So this is another indicator that I would suggest you guys to use as well if you want to learn. Okay, so basically the RSI is considered as a momentum indicators, a trend momentum indicators. So the method that we can use RSI is basically to justify whether the trend, the momentum is at its maximum point, okay, or whether the momentum is actually running out. So basically what we can do over here using the RSI is to justify the overbought and oversold area. Okay, so like to keep it simple, we explain it in a simple way. Okay, so when the RSI is above the 70 line, okay, 70 line, okay, this suggests that the, the trend may be overbought, meaning that the price is too high. I mean, we put it in a simple way, okay, it's too high. Okay? So there's a possible of a bearish reversal, okay, above 70, meaning that the price comes to a overbought area. Okay, so suggesting that the market might go into a reversal, okay, a bearish reversal. And conversely, when the RSI came to below 30, okay, this might suggest a bullish reversal, okay, meaning that the price is oversold. Okay, everyone is selling too hard, and then the price might rebound. The momentums might running up, and then the price might rebound. So this is how we can use RSI to identify it. Okay, also we can use the divergence. Okay, for example, if the price mark a new low, okay, but the RSI does not follow suit, so it makes signal a bullish reversal, and the opposite. If the price is on a new high, okay, then but the RSI does not create a new high, meaning that they might be going to a bearish reversal. Okay, so this is how we can use the RSI to identify the trends. Okay, so like what I say just now in when we start in the early sessions, right? So basically indicators they can be a very helpful tools to help us in making any trading decisions or like making any when it comes to any analysis. I mean, the indicators they can be very helpful. Okay, but there is some how to say the downside of the indicators. Okay, there's some downside in the indicators. Okay, so this is why for some experienced traders, they don't really rely much on indicators. So they're basically using indicator as a assisting, I mean as a assisting tools. Okay, meaning that they only use it to assist us, but not as a primary tools when we come to trades or we come to analyze the markets. Okay, so there's a few things that we need to avoid. We need to know. Okay, like there's a few pitfalls that we need to know when we use indicators as I mean to help us to analyze the markets. Okay, there's some pitfall that we need to avoid. Okay, right. So there's a few things we need to know. Is the first one. Okay, using too many indicators. Okay, so indicators they can be lagging sometimes. Okay, they can be lagging sometimes. Okay, and then by using different indicators, like for example, if we got a trend momentum indicator, we got a oscillator indicators, we got the volume indicators. So they have a different way to calculate. I mean, they have a different formula to generate the signal, right? So for different indicators, they actually have a different meanings. They have a different meanings. So when you are putting too many indicators in your charts, you are easily overloading your charts and you can cause a confusion or a conflicting signal. Like for example, if you put on an MACD, okay, the MACD say, oh, it's time to buy now. Okay, it's time to buy now. And then you put on let's say stochastic. Okay, the stochastic showing that, oh, the price is on a oversold oversold level, yeah, oversold level. So, sorry, overbought level, okay? So overbought level means that you want to sell it, right? But on the MACD, it's a bullish crossover. You want to buy it. So now, which indicator you're going to believe, okay? So, and in this case, you're going to like confuse, okay? So when you're putting too many indicators on your charts, you will have a lot of false signal or a conflicting signal, and then causing you to miss out on the trade opportunities or even making the wrong trades. Okay? So this is the thing that we need to know. And never put too many indicators in your charts. So what would I suggest is the max you can put is 2. The max you want to put is 2. Like for example, in my case just now, I'm just putting on the moving average and also the MACD. just two indicators. Okay, but those are not the primary methods that I use. Basically, when I come to trading the markets, I will actually go into analyzing the chart pattern first before I use the indicators to identify my trading signal. So this is what I do. Okay, so try not to use too many indicators on your chart. Okay, so avoid changing setting constantly, meaning that try not to changing your setting or the parameter that you use frequently. Okay, when you are trying to run on a test, okay, you can fix on a setting. I mean, you can fix on a parameter, and then run for a test for some period of time. Okay, to test out whether they are really consistent, they are really effective. Okay, so try not to do it like okay, I test on a, for example, the MACD. I try on 535.5. This is my setting that I use. And then for the next day, for today, the setting cost me a loss, cost me a losing trades. Okay, so on tomorrow, I'll change it to maybe like 12, 26, 9. Okay, this is a new setting. Okay, and then on the second day, you're losing again. And then on the third day, you change like, okay, to maybe like 3, and then 5, and then whatever going on. Okay, keep changing on your setting. Okay, so when you are trying to use an indicator, okay, when you are making up a setting, try to fix it for a period of time and then run it on a test for a period of time, or you can do it on a back test, okay, to check on your setting, whether it's a effective setting or not. Okay, so try not to change it constantly or keep on tweaking it. Okay, try to fix on it for a period of time, run on it, and then only you change it or you optimize it. Okay, so this is what I suggest you to do. Okay, and then of course, do not rely on the indicator signal alone. Okay, always consider a price actions and market context. Okay, so like what I said just now. So basically, when I'm trying to analyze the market, when I try to trade the markets, I will go on to analyze the chart pattern first. So that's what I do. Okay, I'll analyze the chart pattern first. I'll analyze the price action first, and I see what the market context is. Then only I use the indicators to assist me on finding the entry point. Okay, so this is what I use the indicator for, not as a main signal, but as a assisting tool. Okay, assisting tool. So that's what we can use. All right. So the fourth one will be not testing your strategy. Okay, so try to test your strategy. Try to test your indicators. Okay, before you go on to a live tradings. Okay, before you go on to live tradings. Okay, so and also try to know what's your time frames that you use. Okay, because every different time frame they can have a different setting. Okay, try to know what the time frame you are trading on, and then only you set on the right indicators. So for over here, I can't really share how we can set up the indicators because it's actually depending on your on your strategy on how you trade. Like for me, I know my trading style is different. Okay, I know that for this trade, I might trade on a short terms. Okay, so I'm going to use on this setting. Okay, for some tradings, like for example, for a swing tradings on a day chart or even a 4-hour chart, I will use a different setting, which is I have already back tested. Okay, so I know that it's work. Okay, so this is how we can do. So remember, always test on your strategy. Okay, test on the setting first on a back testing or a demo account. Okay, so or otherwise, what you can do is you can come over to participate our live competitions our season 2 competitions in August. Okay, so I understand that for a lot of traders over there, when you are trading, when you are back testing your strategy or you are running on a demo account, the emotion is different, I know, because like for example, okay, I keep on testing my strategy, okay, and then I'm making profits, but it's a demo account. It's a demo. So the profit can't convert into a real text. It can be, I mean, I understand the feelings. It can be very frustrating or it can be very emotional, okay? So this is the opportunities. So over here, Ultima Markets will be launching a season 2 trader leads competitions. It's a demo trading competitions, but with a real price, a cash price, okay? And then with other more winning price over here, okay? So what you can do if, let's say today you are trying to backtesting your strategy, or you already have a very powerful strategy, but you still want to, how to say, to demo it, or you want to make it better, or you want to, I mean, how to say, like you want to justify your strategy is really a powerful strategy, you can just register on our latest competitions. Okay, so what we have over here is that for this time we will have a Hall of Fame, meaning that if you are ranked traders, you are ranked traders, okay, your name, your strategy will be appearing on our Hall of Fame. So in this case, it will help you to gather some attention, okay, and maybe who knows, you're able to turn it as a copy tradings to earn on extra buck, okay, on based on your strategy. So this is what we have, and then of course we also have more grand prize awaits you guys, okay? So if you're interested to know more, you can just visit on our official website or talk to your account managers on these competitions, okay? All right. So before we go into the last part, I mean, before we end our live webinar for today, so let's go for a quick summary. So to wrap up for today, remember when you're doing trades or when you are running a backtest or anything, just make sure you're having the right attitude, okay? So if you are using technical indicators as your tools in your tradings, okay, remember you need to understand your indicators, okay? You need to understand your indicators, whether they are used in the right way. Okay, of course, you can learn online, okay, you can learn from our I mean, we got a academy page. You can learn from there. So it will explain to you more detail on how we can actually use the indicators. Okay, and of course, indicators, they are not supposed to be solely used as a trading signal. Okay, but it can be integrated into your trading strategy. Okay, so if you want to use indicators, remember, establish a clear trading rules, a clear trading strategy with the indicators. Okay, and the last one, of course, continuous learning. Okay, because you know that markets keep changing. Okay, they never stop changing. Okay, the method that you use today may not be able to use on the next day. Okay, so you need to keep on improving. Okay, keep on optimize your trading strategy. Okay, of course, what I mean over here is not changing your strategy, is optimizing it. Okay, basically the backbone of your strategy does not change, but sometimes you need to change on the methods, or you need to change on the fine-tune some, okay, fine-tune some setting over there to have your strategy to be useful all the times. Okay, so this is what we need to do. All right. So any questions for me for today? Right. If there is no question, then I guess we will end it over here for today. And thank you everyone for participating. So we will have a Chinese webinar for tomorrow, okay? And also we have it for next week on the same time, okay? So I'll see you guys on next week or see you on tomorrow. Okay, bye-bye. Thank you everyone.